Hey everybody, Joe Joseph here for thedailysheeple.com, and this is your news shot. So I was reading a article on SHTF Plan the other day by Jeremiah Johnson that was talking about the stock market and basically how you have all of this success. Life goes on as usual, or in humanity's way of seeing things in the short run, because we don't ever really look at things in the long run. It's always the short run. Our attention span has gotten so compromised. And that article really highlighted the fact that underneath this normalcy of prosperity, the prosperity being the normal way of things on the stock market, well, underneath that, you basically got Yellowstone fomenting, as he described it. Well, the Financial Express has an article by Shushruth Sunder, who talks about Jim Rogers. Jim Rogers, of course, one of the financial analysts on CNBC you see quite often. He's saying that the biggest crisis in his life is less than a year away. He's actually making the call on that. And this is very interesting because Rogers, to me, seems to be one of the more credible people with regards to what's going on in the world financially. You know, he's one of the guys that have said, look, the economy's never recovered. It's never recovered from what happened in 2007, 2008. Things were glossed over. Old bad habits were continued. And really, basically, since we began this shift away from sovereignty in favor of free trade, and then the repeal of Glass-Steagall has really sent banksters and these Wall Street speculators, it's been like Disney World for them. Basically since 1992. Jim Rogers, the renowned co-founder of Quantum Fund, it says, believes that there's an impending crisis. And it's much sooner than you think. This is a quote from Jim. He said, we could see the worst crash in my entire life pretty soon. Now, Jim Rogers founded the Quantum Fund alongside George Soros, who is regarded as one of the most successful inventors of all time. From 1970 to 1980, their portfolio returned 4,200%, while the S&P posted paltry returns of about 47%. Now, this is what Jim Rogers said. He said, quote, we've had economic problems in the U.S., in North America, every 4 years since the beginning of the Republic. To say that we're going to have a problem is not unusual. Now, going a step further, the veteran said that it would be bizarre if we didn't have a problem. Rogers observed that the 2008 financial crisis was due to a rise in debt, and since then, debt's gone through the roof. In fact, Alberto Gallo of Algebris Investments in a recent blog noted that global debt has actually quadrupled, rising 276% in the last decade to $217 trillion. Now, when asked, Jim actually predicted that the impending crisis could be as early as next year. He's sometimes referred to as a commodities guru. See, he believes that gold prices are likely to skyrocket in view of an impending meltdown, which is basically the way history shows. You know, when things are bad, people look to gold as a safe haven. Now with digital currencies, who knows how it's going to play out? Because gold may not necessarily be a safe haven anymore, or it could be one of many. So for people to just go and say, well, you know, you got to put your money in gold. I've always lived by this very simple philosophy. Gold is great. It's sparkly. It's shiny. It makes nice jewelry and stuff like that. But you can't eat it. You can't drink it. And you can't defend yourself with it. So if you're looking for precious metals, I think the two very most precious metals there are right now are brass and lead. They make it harder and harder for you to be able to get your ammunition. States are trying to ratchet down now. Now they want to serialize your ammunition, right? So brass and lead seem to be some very good, safe, precious metals because if you need something, well, you can get it with brass and lead. Whereas with gold, it makes it kind of difficult. If somebody comes knocking on your door because they have something or you have something that they want, makes it hard to defend yourself. If you're going to throw an ounce of gold at them, it's not really going to do too much. And when people are starving, well, gold really isn't the ticket. Look at down in Venezuela. Venezuela right now, people are starving. They would kill for toilet paper, not gold. So all you have to do is take a look at some of these economies that have imploded in the past to see how things would happen in a depressionary scenario here in the United States. The other thing to think about is that there is not going to be a bailout this time. The bailout that you might end up seeing is actually referred to as bail-ins. A bail-in is when they take retirement funds and other funds in banks and they confiscate them. You see, because they're not going to do it on the taxpayer's dime this time. They're going to do something along the lines of what happened in Cyprus, where banks are shut down, they go on holiday, and when they reopen, people have a fraction of what they had before. Why? Well, because our irresponsible banks practice something called fractional reserve banking. And fractional reserve banking, my friends, is very dangerous because as you put $1 in as a deposit towards, to be withdrawn later, or perhaps you're saving something, the bank will go and take that dollar and lend it 10 times. And over the course of time, they get quite a financial sheet that shows a lot of loans and not so much in hard cash. And so when there's a run on the bank, they have to close down pretty shortly after it starts because they don't have the resources to cover all the withdrawals. And so this, my friends, is something that we could be looking at as time goes on because this is abnormal. To have this type of run of stock market love is really abnormal. And the other thing to look at and note is the fact that while there's a lot of prosperity on Wall Street, while the banksters and speculators and financial analysts are living high on the hog and fat, dumb, and happy, you and I, blue collar, white collar, Joe American, are struggling. It's hard to make ends meet. One-income households are virtually a thing of the past now. It's very, very difficult. Those that are a one-income household end up having a lot of financial strain put on them because it's very difficult to do things. And so what's the fallback? Well, the fallback is mom has to work, right? But mom has to have a decent job too because mom and dad then have to pay for childcare if you have children. And that brings in a whole new dynamic. So you can see the problems that have come about. And if we have a crash along the lines of what a Mark Farber or a Jim Rogers or other experts have said is bound to happen because history shows this, then I think it would probably be wise for everybody to hunker down, and start preparing for something that's virtually inevitable if you look at history. A lot of people take a look at the stock market, right? And they say, well, historically, you have 10% growth over the lifetime of whatever. That's the last 100 years. Humanity's been around a lot longer than 100 years. The New York Stock Exchange is but a blip in the history of humanity. Okay, so there's no norm when it comes to that. If you look at the Great Depression was engineered. The Great Depression came about because the banksters wanted to lull people into purchasing stocks to raise what their stocks were worth. And then when it hit the level that they wanted it to hit, well, they just pulled the rug out from underneath everybody. They sold off everything they had and crashed the market. They lent people money to buy stocks, put them in debt that way. People felt good. Hey, I'm in the stock market now. Look at me. Woo, Mr. Joe Investor. And then sure enough, 1929, swoop, they pull the legs out, cut the legs out from underneath everybody. They sell high. Everybody else takes it in the shorts. Largest transfer of wealth from the lower and middle class to the upper class up until that point. And that's what these depressions, recessions are designed to do. They are exactly that. They are a transfer of wealth from the lower and middle class to the upper class. Problem is most of the resources now are concentrated at the top. Can't squeeze blood from a stone. There's only so much more they can do before we out of gas. So, like I said, you can keep on doing what you're doing and you can play the stock market. And hey, you may have the magic equation that you're able to weather the storm, and that's great if you do. But most of us here on Main Street, we don't. And so we have to take precautions in order to ensure that we can weather the storm when things go on. So take a look at your retirement portfolio, see where it's put, where all your assets are, and make changes accordingly. You may find that you don't have to make any changes. But the biggest thing in these times of volatility is to be plugged in and pay attention. And don't make any rash decisions. Do everything logically, methodically, and with a lot of research. And if you can do that and apply that across everything that you do, then you'll be successful. I'm Joe Joseph. This was thedailysheeple.com's News Shot. Feel free to comment below and visit our website at thedailysheeple.com. Have a great day.